Hello and good morning, traders. It is 8 a.m. Chicago time. Look at that. We're starting on time today. We're efficient today. It's 8 a.m. Chicago time on Wednesday on the 6th of April, 2022. Thanks for joining us today. This is episode number 2207. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just let me know if you hear the news feed in the background. I just need to keep it up just to hear what's going on. But if it gets too distracting, let me know. So let's take a look at what the pre-market summary sheet from Convergent Trading is offering today. Again, for more information on what Convergent Trading does, go to convergenttrading.com, and to understand the terms that I'm using, which I use a lot of acronyms and things like that you may not be familiar with. You can get a description of those by going to go to CT right down here on your screen in the maroon box. Go to ct.pro/glossary-terms. It contains a large breakdown or list of all the terms that I'm using. Some of those I've created, some of those are common in the industry, and some of those are common for profiling. So make sure to go check that out. The risk posture today, clearly risk off, especially in Europe. Europe down, the Euro Stoxx 50 down 2.33%. The German DAX is down almost 2%. The NASDAQ really taking one in the teeth this morning, down 1.5 points, 225 points, and the S&P is opening in a gap down as we continue yesterday's sell-off. The S&P down 40 points, opening at currently trading at 44.80.5. The low overnight's 44.73, so we've seen a 7-point pop here in the last 20 minutes or so. So that's the current stance, clearly risk off. And the main driver, as far as I can tell, is continued shock waves from Brainerd's comments on the rapid tapering of the balance sheet. The interest rate portion, from what I've read, the interest rate portion is a little bit priced in. The equities are kind of pricing that in. The interest rate is not too bad since it's extremely low. It's at record lows. Coming up and even having a 50 basis point increase in May may not be such a big deal. The balance sheet taper, however, is a whole different story, and this is what the market is responding to. There was really aggressive selling yesterday following her comments, especially using the word rapid. This is not what the market wants to see, because rapid, and given the history of the Fed controlling inflation, it's quite poor. The expectation is it's likely to go too far before the Fed responds, and it's likely to cause a recession. So various banks are updating. Deutsche Bank came out with its update. It expected equities to be down 20%. By summer of 2023, expected the 10-year yield to be at 3.3%, and so on and so forth. And so the major participants here are positioning in that way, and you're seeing that in your prices in the equity indices. What's on deck? And of course, there's the coal sanctions being contemplated in Europe against Russia, which will further put pressure on prices of energy and so on. On deck today, we had, this morning, we have factory orders out of Germany came in much worse than expected, down 2.2% versus the forecast of down 0.5%. Great Britain global CIPS construction PMI came in at 59.1 versus 58.5. Then we have Fed's Harker speaking at 8:30 right at the open. We have the crude oil inventories at 10:30, and then the big one, the FOMC minutes. People are going to be dissecting this. The text for this is going to pop up on Bloomberg terminals, and all kinds of algos are going to respond on trigger words or whatever. So this will be interesting. Make sure that you are protected around 2 o'clock Eastern time. Remember, your job, yes, we are all here to make money, but if that only happens if you protect your risk first. Protect your risk first. That doesn't mean you play defense all the time, but make sure that your risk is protected before you go on the attack, right? Looking at the S&P multi-distribution profile, active price discovery, the point of control has shifted down. It was in the middle earlier. It has shifted down to 44, 77, 75. We have quite a range today, 55.75 points. Unusual range compared to the statistics below. In this section, the overnight statistics section, the volume is relatively high compared to prior sessions of 231,000, and the inventory is 80% short. 80% short, meaning 80% of the volume occurred below yesterday's close, pushing the short side. We're seeing a pullback in Bitcoin and Ether, especially Ether. And that's where we are. That's the recap. That's the story, and I'm sticking to it. Here's what I expected yesterday. Yesterday, I outlined, given the way this is set up, I outlined that I'm expecting the market. Now, remember, one-time framing up. I expected the market is likely to pull back. I expected it to hold 55. Worst case, we have a long against 50 or 53. That zone between 55 and 50 was very, very interesting to me yesterday. And it did play a little bit despite Brainard's comments. This area is very important. And the expectation is we would take a bounce from here and come back and most likely take out the high, the prior high, and start working ourselves to continuing to the upper distribution. I'll put a box around that up here. So scenarios 1 and 2 were looking to the long side because all indications were that buyers were strong and are maintaining pressure against sellers yesterday. Here's what actually happened. So scenario 1 was looking for a pullback to 55, the range of 55 to 50, and expecting a pop. Here's what we had yesterday. This is a 30-minute chart. Let me cut it down to 15 just so that we can see a little bit better what happened. And so we're looking for it to pull back to right here, right in this area, right there. You see that? Wish this thing had better capabilities of drawing straight lines, like by holding shift or control, but it doesn't. So we saw Harker come in, and the SOC for Harker is 45.8450, I believe. 45.8450. We see the drop for Harker. Look at this, just a beautiful tag of that 50 area, a nice pushback up higher. Actually, these levels, these market-generated levels here, the mid is the blue, and the VWAP is the cyan, and these are full session levels. But if you really want to see how things looked in action, I'm just going to turn off my DOM here. Look at these bubbles. Look at these bubbles. You see those bubbles there? Let's bring them up a little bit better. The bubbles that were, they should print here in a minute, or I did something wrong, not sure. Let's go. Anyway, the bubbles here, there was a lot of volume, a lot of hits, big trade bubbles coming down. So this was very aggressive. At that point, we had a mid-long off of the full session mid for continuation. Looked beautiful. This is what I commented on in the on Twitter, we had a really nice mid-long pushing the prior high and squeezing higher. And the goal for that mid-long was 4,600. And then Brainerd comes in, and boom, it explodes to the downside. We end up with an IB at that 45.50 area outlined, and we pull right back to the RTH VWAP. Couldn't quite get to the mid. We pull right back to the RTH VWAP. We had poked the IB, so the overnight the IB stat was done, and then it starts to break down. I found the action below here, this action here, difficult to trade. Did not see a clear way to put something on and define risk here. This could have been, hindsight 2020. This could have been played here with the zipper and looking at the zipper top as a risk control. But once it broke, I'm expecting it to come back a little bit to give us a chance to get in short. And it didn't do that. I didn't trade any of the action into the close yesterday. And then from there, 1 second. From there, we opened back up. The auction basically got cut off by the fact that the market was closing. And then from there, it was clear that we were likely to continue the selling, and we did. And we are down into this 44.80 area, giving us an open in a gap this morning. We're opening in a gap zone this morning, and that's what we're looking at. So we're likely to lean pretty strong to the short side. Let's take a look at a different view. This is a 1 tick by 20 point and figure chart. And it shows that we are starting to squeeze against the 200 simple moving average, a 200-day simple moving average right there. So we're coming into this area that's got a couple things in it. One, it's got a low volume node right here. The low is right at the neckline at 44.73. This is a pretty important reference. And in addition to that, we have the 200 simple moving average, the 200-day simple moving average. This is an all sessions 200 moving average. The RTH only 200 moving average is at 44.68. So they're not that different from each other. They're off by about 2 points. And so we're coming into an interesting area. Looking at the bigger picture in our composite chart, we've left behind this 45.36. This is the swing magnet, the bigger picture magnet. This area here, we're falling below it. I'm bearish below that. We do have some resistance here at 4,500. We've got the point of control, the MC point of control from 2 weeks ago, in addition to the low that was put in on Friday before the spike higher. So remember, Friday we opened, we sold off strong, and we came right back almost to the open. We closed on Friday above the 36. We settled, the weekly settle, I believe, was 30. Weekly settle was 39 and a quarter. So we ended up settling above the MC point of control, above this really big volume area. So that looked bullish-ish since it poked through and it came right back. That's a kind of a bullish indication. It would not be able to do that if it weren't bullish. And now what we've done is we've gone into the tail. Again, let me pull this up for you, nice and clean. We've basically pushed into the tail here yesterday, and that is likely to cause it to fall pretty precipitously. And now we're below 4,500, so I'm expecting the 4,500 to act as resistance in price action and in volume. So let's look at that. So we're just looking at the volume profile, and you can see, oops, let's try that again. You can see right here, quite a bit of volume at 4,500. So any push into the 4,500 is going to be a sell attempt by me for it to come back to the open and most likely tests into this 44.57, 44.55 area. That would be the target to the short side. Okay, so that's how things are setting up. We have been doing really well on the weekly, pushing these highs, and now we've broken the weekly one-time framing. So we've broken the daily one-time framing down with Monday. We've broken that. We've reversed that. So this is a double reverse. We've reversed that to the short side yesterday by taking out yesterday's low, and then we've taken out the one-time framing on the weekly, the one-time framing up on the weekly. We've taken that this morning because we are opening below last week's low. So this is bearish, and the expectation is we are likely to test into this 55-57 area next. And that's the narrative. That's the big picture. That's what creates the strong trades, and that's what sets us up for holding on when there's a doubt, right? So that's where we stand this morning. Let me reset this. So what are we looking for today? Turn on my levels. Here we go. So what are we looking for today? Here are the expectations. This morning, the inventory is quite short. We have a point of control at the low. We have a weak low. The expectation is an open auction that tests lower into the 200-day moving average. I'm expecting some response. I'm expecting it to push pretty strong in the other direction. So I'm looking for a lower low against yesterday's, against the overnight low, but I'm expecting it to really run into some trouble getting that 45.07 to finish right in here. This, of course, before the FOMC meetings, minutes, the FOMC minutes. So I'm expecting a test into this 68 area. I'm expecting a test into the 00, the 4,500. And then later I'm expecting it to hold somewhere in the middle, to finish somewhere in the middle here. I don't expect it back into the prior range. I don't believe that the minutes are likely to reveal something dovish that the market is likely to price in. So we are below the key over underline, which is up at 45.33, which is the MC point of control. And I'm expecting this to be bearish and to continue lower. I don't know if it's able to continue lower in a trend or not. The secondary scenario is an open auction that attempts to push towards 45, then gets an impulse down, and this is the better scenario to trade. An impulse down pushes the overnight low through the 200 moving average, pulls back, and then starts to move towards this 50 area. This 50 to 55 down here becomes the target. Okay, and that gives us about 50 points of range for today on scenario 2. Again, the FOMC minutes are likely to throw a wrench in things a little bit, but I'm expecting some pretty good structural setups today. We do have pretty good range overnight. We've got 55 something points, and so I'm expecting that to carry over. Got 56 points. I'm expecting that to carry over, so I'm projecting 50 points up or 50 points down, and the areas to lean against are 00, this area here at 77, and then I'm looking for it to break the 68 and push to 50 below. So 00 to 50 is the key range. Okay, if the sellers are not that strong, it'll hold sideways. I'm really not expecting it to get above 4,500 and start pushing back towards 45.33. By the way, there is a scenario here, scenario 3, where it responds. Let's put that on here just so we can review it tomorrow. There is a scenario 3, open auction, breakdown, take out the overnight low, drive up, consolidate at the 4,500, and then come back into the range. And in that situation, we're coming right back to this 45.33 to 36 MC point of control, and that's the over underline. That would be scenario 3. That's a bullish scenario. It ends up giving us a lower high, lower low, but with somewhat of a response after the FOMC. Okay, so those are the plans for today. That's what the structure shows. Now it's all about waiting for price, reading price, seeing how it's responding to these key areas, and then taking a position with defined risk and just letting your hands go of the mouse and letting the market decide what it wants to do with the trade. Okay, good luck, and I'll catch you tomorrow morning. Take care.